What is going on? Today we are talking about an advanced crypto trading strategy called margin trading or trading on leverage. This is only for someone who has the ability to take high risk, who knows technical analysis. This is not for a newbie to like get into immediately, but maybe it's good for someone, for like a newbie like myself, to not feel so dumb when people are talking about margin trading on margin, trading with leverage on these YouTube videos. I feel like a dummy, you know what I mean? So I need someone to explain it to me in simple terms using stick figures, and that's what I'm about to do, okay? So my lips are chapped, you know what I'm saying? I'm trying to get this going on. If you're new to this channel, my name is Aaron. I'm on a journey to 1 Bitcoin. I'm not a financial advisor. This is not financial advice. I'm a cowboy who gives cowboy advice, okay? So you can't sue for that. It's not worth much. I have a little lizard brain, gorilla arms, and diamond hands exploring the wild west of cryptocurrency with a whole bunch of cowboys. If you want to join us, hit the subscribe button down below. Hit the notification bell for any updates and content. Give us a like button if you are a generous person. Of course, join the Telegram because, you know, that's where all the cowboys hang out. Now, I just want a simple understanding of what the heck margin trading is and trading on leverage, because I hear that term all the time, and I hear that there's a lot of reward and risk on it. And so just a fair warning, this is not for a new investor, okay? This is for someone who knows what technical analysis is, knows how to spot entry and exit points. But I think it's fair that we should at least have some kind of idea, some kind of semblance, so we don't feel like a complete lizard brain out here. Now, I'm gonna go to my iPad, and let's just say that this situation is a real life situation. Let's say you have $10,000 of your own money, and say you wanna buy a house, right? And so there's two ways you can go about that. You could take your $10,000 and buy a $10,000 house, right? That looks like six. A $10,000 house, and that could be great. Or you could go and buy a $100,000 house with your $10,000. How would you do that? Well, obviously you'd go to a bank, and they would loan you the money because you have $10,000, and then you could now own an asset that is worth $100,000 for only $10,000. Or you could own an asset worth only $10,000, right? Now, say in 2 years, right, the market turns and you make double your money, right? Price of all real estate doubles. That means if you bought the house for $10,000, you're now sitting at $20,000, $10,000 in profit, right? That's baby brain math, simple math. If you 2x on your $100,000 house, excluding fees and interest and all that stuff, you're sitting at an asset that's worth $200,000, and you've made less your $9,000, $10,000, or sorry, less your $10,000, $90,000. Let's just say $80,000 because fees and interest and all that kind of stuff. Great. You decide to sell. You cash out. In one scenario, you only made 10 grand. In the other scenario, you made 80 grand. Sounds simple to me. This whole situation right here, that is on margin, trading on margin, buying on margin, using leverage. That's what all that is. Now, let's take this and take it into cryptocurrency. Let's say you take $10,000 of your same money, and you want to buy into an asset, a great asset called ADA, right? Let's buy ADA. Now, ADA is worth, let's just pretend it's worth $1. It's pretty close to that. And so you could buy $10,000 worth of ADA, or you could try to trade on margin and try to buy $100,000 worth of ADA. How would you do that? There's no banks in crypto. We don't like banks. So we go to an exchange. Let's say we go to Binance, right? And we go to Binance and we say, hey, we have $10,000. Can I use your money and leverage it so that I could buy $100,000 worth of ADA? And they give you the money. You got to apply, and you got to do the two-factor identification and all this kind of stuff. And then so yeah, this is so you make that. Now in let's say a year, right? In 1 year, let's say this 2x's. Okay. So now your ADA that you bought at $10,000, at $1, $10,000 invested, is now worth $20,000, and this one's worth $200,000. You have now made, as part of the last example, and they're taking out fees. You've now made $90,000 minus the fees, so that's $80,000. And here you have only made $10,000. Which one's better? This one, right? So very simple. This is margin. Okay, that's margin trading. Now, there's only two positions you could open up. It's like part of the contracts. It's just how it works. There are two positions that you can open up. What are called a short position, short, and a long position. Okay, and this is very easy to understand. A short position is where you take that leveraged money and you say, hey, I think the price of ADA is going to go down. And so it's going to go down to 50 cents. Say it's worth $1 right now. I think it's going to go down to 50 cents. Oh, that's fine. Let's say it's worth 50 cents. And so you are going to plan to buy it at 50 cents. Now, say you take the long position and think it's going to go up, and you plan to buy it, and you buy it now and you sell it at $2, right? You either lose half of it or gain 100%, double your money back. And that's the game, right? You don't know. I don't know. I mean, you could try to spot technical analysis, and that's why this is important. But essentially, if you're wrong, you could, I mean, they stipulate these contracts in a whole bunch of different ways. I'm not sure all of them, and I would assume that all of them are different from different exchanges and platforms and all that stuff. In short, you could stand to lose a lot of your money, or you could stand to gain a lot of your money, but it's dependent on, you know, your ability to see technical analysis, to your ability to like really see what are good entry points and exit points of a particular asset or cryptocurrency. So I thought this would be very, very helpful if we went to Binance and just got their kind of take on what is margin trading. And it's so basically in traditional markets, the borrowed funds are usually provided by investment broker. In crypto trading, however, funds are provided by other traders who are interested in, or who earn interest based on market margin funds. So people who, you know, give that money to Binance or these other places, you know, they are loaning out their money so that we can trade on margin. Again, this is for extreme experts only. This is not for noobs to just start doing at a high margin, because you could be trading on, you know, different ratios. You know, you could be trading on a ratio. So this ratio is like the ratio that we use in examples, like a 10-to-1 ratio. Binance offers like something as high as 125 to 1. You could do a 2-to-1. I mean, like it's different, you know what I mean? So if you invest $1, you get $2, or if you invest $1,000, you know what I mean, you get $2 for every $1, basically. And so I think that's very helpful to know that, you know, the money comes from other people, but you find it basically on the exchanges. And so, you know, we already talked about some of this. Here's some of the advantages and disadvantages, though. For its advantage, it is the fact that it could result in larger profits due to the greater relative value of the trading positions. Okay, so other than that, margin trader can be useful for diversification, as traders can open several positions with relatively small amounts of investment capital. Finally, having an account may make it easier for traders to open positions quickly without having to shift large sums of money into their account. So there's three advantages that they list out here. One, higher returns, okay? Higher returns for like the low amount of capital that you have. Two, you could shift these funds easily and move them quickly. You know, just open it up and you get the money right there. There's no shifting and all that stuff. And three, you're able to diversify better with more of this. However, there are disadvantages. Unlike regular spot trading, margin trading introduces the possibility of losses that exceed a trader's initial investment, and as such is considered a high-risk trading method. Depending on the amount of leverage involved in trade, even a small drop in the market may cause substantial losses for the traders. Okay, so for that reason, it's important that investors who decide to utilize margin trading employ proper risk management strategies, okay, like stop limit orders. Okay, so I mean, this is huge, right? Margin trading in cryptocurrency markets. Trading on margin is inherently riskier than regular trading, but when it comes to cryptocurrencies, the risks are even higher, owing to high levels of volatility. Okay, cryptocurrency margin traders should be especially careful, while hedging risk and management strategies may come in handy. Margin trading is certainly not suitable for beginners. I gotta make sure that I say that, but just so you beginners know out there, this exists, and so just, you know, just be aware. Now, if you want to follow along with me in anything else that I do, follow along with all these cowboys, hit the subscribe button down below, hit the notification bell for any updated content, especially on these token reviews and dev interviews and all that kind of stuff. And give us a like button on this channel if you want to see this channel grow and succeed and you want to be a part of it and you're a generous person. I really appreciate that. Anyway, thanks so guys so much for watching. We got little lizard brains, gorilla arms, and diamond hands, and we're headed to the moon. We'll see you next time.